You're with us here on BTTV. I'm Abha Bakaya. Let's take a look at how markets are doing this afternoon. We're continuing to see strength still again at those all-time highs. Every day is a new story, 18,600 and above on the Nifty 50. Sensex at 62,728 right now, 0.3%. But you're just seeing consistent gains coming in. It's a strong 200 point move on the Sensex. And Nifty also a nice 60 point higher as well today. A lot of interesting movers. Again, HUL today is up about 3.5%. That's a strong one. JSW Steel, Britannia, some of the others. So metals bouncing back somewhat. FMCG continuing to stay on top. Cipla, Nestle, Sun Pharma. So clearly Pharma's making a little bit of a comeback, at least in today's session. We also saw a good move coming in on delivery. We've got SBI, Bandhan Bank, of course, on brokerage upgrades. Lots of buy calls coming in on a Bandhan, and that's what's driving it higher. So that particular pocket continues to look good as well. Britannia, there's also some news, a JV pack coming in, but the entire FMCG pack is moving higher as well. Lupin has a new launch, Gland Pharma is moving as well. So that entire pack is seeing a fair amount of action coming in. But fresh highs continuing and momentum remains intact, and we'll discuss some of that with our guests in just a short moment. But while markets continue to remain on the higher level, what's happening to our GDP forecast and the growth outlook for the economy? Will that play spoil sport? Let me welcome in Indranil Pan. He's joining us on the show today. Indranil, great to have you with us. And I wanted to jump in and get your perspective on the recent spate of downgrades that we've seen across the board. Markets don't seem to be reflecting any of those concerns. Is this going to come and hit us with a shock? Is there going to be some kind of a delayed outcome? What are you anticipating? How grim does the picture look when it comes to growth contracting?
We are looking at a 6.3% growth for the quarter's result that will be announced on the 30th of November. For the year, we are at a 6.9% growth, while a lot of the multilateral agencies have been downgrading growth. Our original growth estimate for the year was at 7%, and therefore we are not too much deviant from that at this point in time. We might, however, have to relook if 6.3, which does have a downside risk if that materializes.
So, what do you feel perhaps are the factors that one should really take into account right now, Indranil? If you're factoring in, let's say, 7%, which is a little on the higher side, given all these new downgrades, what's making you so confident about the economic recovery staying on track now?
A 6.9% doesn't necessarily mean that we are in an economic recovery.
Okay.
In fact, the previous quarter's number was a 13.5% on the GDP, and therefore we are getting into more normalized zones of GDP growth if I look at on a quarterly basis. Going forward, I think the challenges will be on the personal consumption front. This quarter or the third quarter, personal consumption may have been relatively sort of better and resilient because of the festive demand. But given the higher interest rates and given the very fact that inflation continues to be sticky, the private consumption demand could struggle in the fourth quarter and in the quarters hence, because we are looking at a lag with which the monetary policy operates. We do think that the rate hiking cycle in India is not yet over, and we do expect that given the high level of inflation that we still see in the economy, the RBI will continue to hike all the way till February, because on the other side, they also have to keep a bit of a pace with the US and the global monetary policy cycle, because that's what determines your foreign investments into India.
Okay, fair enough. So, in that context, then, are you looking at 2023 perhaps being a tougher year? And, is that something that markets should be prepared for?
Surely, from a growth perspective, it is likely to be a tougher year because as we go ahead in terms of the months and the quarters, the global growth is expected to slow even further. The assumption here, of course, is that the Fed continues to hike to a terminal rate of 5 quarter. Europe is already in a slowdown, or certain portions of Europe, including Germany, already is in a recessionary zone. So all that will manifest itself in the in the coming quarters, and therefore we are expecting a slower growth for India from the export performance perspective. I did talk about the private consumption expenditure, which is likely to taper off from its resilient zone in the third quarter, which was led by the festive demand. The only source of growth that can be there possibly is the government consumption expenditure, but we are expecting government to also remain quite careful in terms of its fiscal and the way it uses its fiscal to push growth. The government also had been talking about a 50 basis points reduction in the gross fiscal deficit GDP ratio for the next financial year, which means we should see fiscal contracting. So all this taken together, our next financial year or FY24 growth number or initial numbers that we are looking at this point in time is around 6.2%.
Okay, what does this do to some of those capex plans then, Indranil? Because everyone was banking on that really taking off and continuing to remain on track. Are we going to see a bit of a volley there, a damn squib when it comes to hearing about capex plans from companies?
Since you talked about the companies, I think we are not really quite robust in terms of private capex plans. Yes, the capacity utilization levels may be up at around 74.5%. The balance sheets are much cleaner to push ahead with the capex plan. But the whole issue now is the demand side story is not looking as robust going forward, which necessarily means that the domestic demand is not really looking at any upside. The external demand is likely to slow off, which means that we can see some of these cycles turning towards the negative side also, and the capacity utilization levels of the industry dropping off from the 74 and a half. So I'm personally not very confident about the private capex, and most of the trackers that indicate project announcements, yes, the number of projects have been higher than in the previous year, but overall the numbers may be higher, but overall value attached to these numbers is still lower than the pre-COVID levels. So that's the other sort of thing that I would be highlighting to understand that capex may not have a significant recovery going forward.
All right. And how much of a role do you think the trade deficit is also going to play here, given the government's attempts or steps to really manage to contain it, given the data so far? Anything that you'd like to comment on there?
I think the export performance remains crucial. We have anyway seen export performance having been weaker. On one side, the global demand is weakening, and on the other side, commodity prices also are coming down. The oil prices, in my opinion, could actually be sticky in the 85 to 90 zone, because it would be in the interest of the oil producing countries not to allow the oil prices to drop any further, because that has clear implications in terms of their own fiscal. So given this sort of a situation, I think the pull or the downward sort of drag from the net trade will continue for the GDP in the year hence also, as we have seen in the current financial year. So that will definitely be a problem. To a certain extent, the non-oil, non-gold import could be seen to cooling off, because the whole attempt of the Reserve Bank of India in terms of raising interest rates and trying to cool inflation will be through the demand channel. So that element to a certain extent may actually cool off.
Indranil, thank you so much for joining us and for taking us through some of those crucial numbers and expectations. Great speaking with you today. Let's also go across and listen in to the Revenue Secretary. Ahead of the budget, we're also focusing on India's tax regime, and with expectations nestled around the simplification of the capital gains tax, the big question is, will the ministry take note of some of the anomalies in those guidelines? Our managing editor, Siddharth Zarabi, had the chance to speak with Tarun Bajaj to understand the Finance Ministry's approach.
What is the meaning of, for the benefit of our viewers, what would this approach imply, where you, and just now you also spoke about the need to fix capital gain on various asset classes, because there is a divergent approach which has built up over the years. What would you recommend as the approach?
Today we have various asset classes, and even within the same group, say financial assets, somebody says that if you put in debt mutual funds or you put in debt directly, it is capital gains are different in the two cases, and there is a demand from the industry or from the capital market that we need to bring uniformity into this. So I think there have been various articles which say in some cases we get benefit of indexation, in others we don't get benefit of indexation. In some cases, as I told you, for 1 year, it's 1 year and below is short term, 1 year and above is long term. In some cases, 3 years and above is long term, below that is short term. So I think there's a need to think about it, simplify this so that there is no arbitrage created between financial products because there's a tax advantage. The product should sell based on its strength rather than on the tax arbitrage. So today, maybe we have created those tax arbitrage. I just read it in the papers that the industry is also saying that there's a difference in taxation between ULIPs and mutual funds. So all these things, corrections, if they are made, I think that will make it much more stable and much more progressive than what we have today.
Corrections in one go or spread out over time?
This is something which the budget makers will decide this time. I'm not part of the budget making exercise, but if you ask me my own opinion, I would say that if you're doing a correction, you should do whole stock rather than doing it bit by bit, so that there is clarity, because people who are coming into the capital markets are also big people, FIIs, FPIs, the mutual funds. So they should know in the long term that this is what the regime is going to be, and this is going to be stable for the next 10, 15, 20 years.
What is the...
Let's also go across to Akanksha now. BlockFi, one of the biggest crypto lenders, filed for bankruptcy late last night. As per its petition, the company has up to $10 billion in liabilities and had exposure to Terra Luna, Celsius, 3AC, as well as the FTX crash. Akanksha, this is yet another one to bite the dust.
Yes, that's true. And not just this company, BlockFi, we have other companies as well that have shut down today. We have a company called Bitfront that has stopped operations. It was a cryptocurrency exchange, and they have stopped all kinds of deposits, and all kinds of lending from the exchange has also stopped. And the effect of this is also visible in the cryptocurrency markets. Bitcoin is trading at around $16,000, and we know that Bitcoin was trading at $70,000 at its all-time high a couple of months ago. Even Ethereum is seeing the pinch of this crash, and Ethereum is trading at around $1,200. Other cryptocurrencies are also seeing the effect of this. But interestingly, Dogecoin, which is a meme coin, and it's also known as Elon Musk's favorite cryptocurrency, Dogecoin has been rallying recently, and in the past 24 hours, the cryptocurrency rose over 9%. People say people say that it's because of Elon Musk's activities on Twitter, and that is positively, bringing a positive effect on the prices of Dogecoin. But well, it is indeed a true reality that Indian government, in a way, saved Indian investors from this crypto bubble by introducing strong regulations and also by dissuading investors from investing in cryptocurrency after introducing a 30% tax. Back to you, Abha.
All right, thanks for that, Akanksha. Let me check if Amit Srivastava is with us now. Let's go across to some of the other action that we're seeing then in trade, and a whole host of those gainers that we're tracking as markets continue to move to higher levels. Talked about some of the pharma names. Let's take a look at Dabur. That's also up about 6%. Imami's up about 6%. A couple of those names are moving. Delivery is looking really good today. 197 actually also seeing a little bit of attraction coming in. Talked about Bandhan. Union Bank's also up about 3 to 4%. IIFL from the financials, Bank of India, Marico. So, I mean, FMCG, the entire pack is really looking like it's seeing some amount of action coming in today. Quest Corp, Bilcon, PB Fintech, some of the other movers in trade, Cipla, Britannia, A couple of the others, the Hero continuing about 1.5% uptick today. Hero has been on an uptick of late. Vinati Organics also consistent in its gains on that one. And then a few others as well that continue to catch our eye. I'm just going to also look through some of the major indices to see what else is contributing to the gains in today's session so far. But let me take a look. IT is lagging today, not much action coming in there. The broader indices actually not really participating. Having said that, a new India assurance is up 11% in today's session. So from the broader markets, that's one that's definitely catching my eye across the board. And you know, while we have onward technologies as well from the broader markets, onward tech is up about 9 to 10% as well. So some of these movers from the broader markets that are definitely catching our eye so far in today's session. Let's continue to take a look at some of the other movers in trade and anything else that's perhaps at its 52-week high so far. We've got, of course, a whole host of stocks that have been moving to those 52-week highs on the back of some of the gains that we've been seeing. Britannia, for example, ICICI Bank, Apollo Tyres, CET, IDBI Bank, a whole host of these that actually have been looking really good. Redington's up about 4% today. General Insurance is also up looking good. IFL Finance is up 5-6%. Rail Vikas, rail stocks have been buzzing. Some of these names catching our eye. And HAL, of course, has been a steady mover lately. It's not buzzing today, but watch out for a 52-week high on that one as well. All right, we're going to leave it there on today's show, but do stay tuned. Lots more coming up, and we'll also play out that Tarun Bajaj interview for you at 5 o'clock once again, the Revenue Secretary, on some of those taxation changes in the budget. Our global business editor, Udayan Mukherjee, joining us now. Udayan, yet a record high for the markets and also a great start to the week. It looks like we're in full form now as we head towards the end of the year and, of course, closer to budget.